Hello, friends. Something is making millions of retirees stop and question their benefits. Not a vague discomfort, not a general sense that something feels off without any specific reason attached to it. A very specific, very legitimate question that is spreading through retirement communities, through family conversations, through the comment sections of videos like this one. And the question is this: is the number SSA is paying me actually the number I am supposed to get? For years, most retirees have operated on a simple assumption. SSA calculated the benefit, SSA sent the deposit is correct. There has never been a strong reason to question that assumption, because questioning it requires knowing what to look for, where to look, and what to do when you find something that does not add up. Most retirees have never been given that knowledge. SSA has never provided it proactively, and so the assumption has held, quietly, at significant cost to the retirees for whom it was never accurate. Something is changing that assumption now, and today I am going to tell you exactly what is driving that change, what millions of retirees are finding when they actually look at their benefits closely for the first time, and what the most common sources of legitimate benefit discrepancies are, with the specific steps to take if you find yourself inside one of them. Because here is what the questioning is revealing. For a meaningful percentage of the retirees who are digging into their benefits right now, the answer to the question is no. The number is not right. The benefit has been running lower than it should be, in some cases for months, in some cases for years, and the path to correcting it is straightforward once someone explains where the error is and how to address it. Stay until the very end. The last source of discrepancy I cover today is the one generating the most questioning right now, and the one where the correction, once initiated, produces the
most significant permanent change to what lands in the deposit every month going forward. And if SSA Now is the channel that gave you your first real reason to question your own benefits, subscribe right now and turn on the bell. The questioning that is happening across the country right now is the right response to a system that has never made its calculations transparent enough for the people living on them. This channel makes them transparent. Subscribe and stay ahead of what SSA is doing to your account. Let me start with what is actually driving the questioning. 3 things are happening simultaneously that are pushing millions of retirees toward a closer examination of their benefits than they have ever done before. First, deposits are not matching expectations. Retirees who planned around a specific monthly number are opening their banking apps and seeing something different, sometimes higher, sometimes lower, sometimes the same number but with a deduction structure that changed without explanation. The inconsistency between what they expected and what arrived is the starting point for the questioning. Second, information is reaching people that was not reaching them before. Videos like this one, conversations with family members who found out about SSA 44 or earnings record corrections or survivor benefit comparisons. Word spreading through communities that certain benefit amounts that were accepted as fixed may actually be challengeable. The information gap that kept most retirees from questioning is narrowing, and as it narrows, more people are asking the question for the first time. Third, the questions are producing answers that are different from what most people expected. Retirees who dug into their earnings records found errors. Retirees who called SSA and asked about their Medicare deduction found out they were paying an ARMA surcharge that could be appealed. Retirees who asked a surviving spouse whether SSA had compared both benefit options found out the comparison was never made. The answers are validating the questions, which is driving more questions from more people. This is the cycle that is producing the widespread questioning, and it is a healthy cycle. The retirees who question their benefits and find something wrong are the ones who recover money they were always entitled to. The ones who accept the number without questioning are the ones who leave it on the table indefinitely. Here is what they are finding when they look. The first thing millions of retirees are questioning and finding errors in is their earnings record. Your Social Security benefit is calculated using your highest 35 years of indexed earnings. SSA built that record from payroll data submitted by your employers, going back across your entire working career. In a system that processed decades of payroll data, much of it manually before the digital era, errors accumulated at a rate that nobody systematically corrected. A year where an employer submitted the wrong amount, a period of self-employment that was not properly reported, a stretch of work in the 1970s or 1980s where records were lost or transferred incorrectly during a company transition. Each of these errors sits inside benefit calculations right now, producing monthly deposits that are lower than they should be. Most of the retirees carrying these errors have never looked at their earnings record closely enough to find them because nobody ever told them the errors were worth looking for. What they are finding when they look, specifically when they log in to SSA.gov and go through their earnings history year by year, is that the errors are more common than they expected, and the dollar impact is larger than they assumed. A single year where SSA's record shows $15,000 less than a retiree actually earned can reduce the monthly benefit by $50 to $80, depending on where that year sits in the calculation. Over a 20-year retirement, that single error
represents $12,000 to $19,200 in cumulative underpayment from 1 year that nobody flagged. The questioning retirees are also finding that the correction process is more accessible than they assumed. Log in to SSA.gov. Compare the earnings in your record against whatever documentation you have: old tax returns, W-2 forms, pay stubs. Identify discrepancies. File a correction request with supporting documentation. SSA processes the correction. The benefit recalculate. The new higher amount follows you permanently, including into every future cost of living adjustment. The window for this correction is not indefinite. Documentation from the 1970s and 1980s gets harder to locate with every passing year. The retirees who are questioning now and acting on what they find are doing so at the most favorable moment still available, before the records that support the correction become impossible to find. If you have never reviewed your full earnings record year by year, log in to SSA.gov today and start. The questioning that millions of retirees are doing right now is worthwhile. The answer for a meaningful percentage of them is the answer that changes their monthly income permanently. Second thing retirees are questioning, why their Medicare deduction is higher than they expected, and whether it can be reduced. This is the question that is producing the most immediate financial relief for the retirees who follow it through to its answer. And the answer, for a significant portion of them, is yes. The deduction can be reduced, and the reduction produces a permanent increase to the net deposit, starting in the very next correction cycle after it is approved. Here is what the questioning is surfacing. Most retirees know their Social Security deposit is reduced by their Medicare Part B premium. Many of them know the standard premium is $185 per month. What most of them do not know is that a surcharge called IMA may be adding substantially more to that deduction, and that the surcharge is based on income from 2 years ago that may no longer reflect their current financial reality. The retirees who are questioning their deduction and asking SSA to break it down line by line are discovering ARMA surcharges they did not know existed. They are discovering that those surcharges were applied based on 2024 income that was elevated because of a one-time event, retirement, a property sale, a Roth IRA conversion, a large distribution, that no longer represents their ongoing income picture. And they are discovering that a form called SSA 44 allows them to appeal the surcharge based on a qualifying life-changing event and have their premium recalculated based on what they actually earn now. The retirees who file SSA 44 with complete and specific documentation of their qualifying event are seeing premium corrections of $74 to over $400 per month permanently, starting within the correction processing cycle after approval. This is not a one-time adjustment. It is a permanent monthly increase to their net deposit that follows them going forward because a surcharge that was legally challengeable stops being deducted. Download SSA 44 at SSA.gov. Document your qualifying life-changing event specifically, the date it occurred, the income that ceased, the supporting evidence that establishes the one-time nature of the 2024 elevation. File it. Follow up after your first corrected deposit to confirm the full correction is reflected. The questioning leads here. The answer produces real money back in the account every single month. Drop a comment right now and tell me, before watching this video, did you know that your Medicare deduction included an ARMA surcharge and that the surcharge could be appealed? Because the number of people who are finding out about SSA 44 for the first time right now in comment sections and videos is exactly what is driving the widespread questioning, and I want to know where you are in that process. Third,
thing retirees are questioning, whether they are on the right benefit type and whether a different option would pay them more every single month. This is the question that is generating the most shock when the answer comes back. Because the retirees who ask it and find out they have been on the wrong benefit, collecting less than a different available option would have paid, are discovering that the mistake has been running for months or years and that nobody at SSA proactively identified it. The group most affected by this questioning is surviving spouses. Widows and widowers who contacted SSA after losing their partner were in many cases given one option. Here is your benefit, here is the amount, without a clear comparison of what the alternative option would produce, the alternative being the strategic interaction between the survivor benefit and the surviving spouse's own retirement benefit.
Two different benefit streams with different optimal collection timings that interact in ways that, handled correctly, produce a permanently higher monthly income for the surviving spouse. What the questioning is revealing is that a significant number of surviving spouses are currently collecting the lower of the two options available to them, not because someone analyzed their situation and determined it was optimal, but because the comparison was never clearly made when they first contacted SSA. They took what they were offered. The other option sat uncollected. The survivor benefit at full retirement age is up to 100% of what the deceased spouse was receiving, including any delayed retirement credits they accumulated. For surviving spouses whose late partner had a strong earnings history and delayed their own Social Security claiming, that survivor benefit can be substantially higher than what the surviving spouse receives on their own retirement record. And for surviving spouses whose own retirement benefit will grow significantly by waiting until 70,
the optimal strategy may be to collect the survivor benefit now and switch to their own maximized benefit later. Neither of these strategies is available to a surviving spouse who was never shown both options clearly. What the questioning is making available is the conversation that should have happened originally. Call SSA at 1-800-772-1213 and request a survivor benefit comparison review. Ask them to pull both your own retirement benefit estimate and your full survivor benefit amount and present them side by side with the implications of each collection strategy given your current age and full retirement age. That conversation is free. The difference between the wrong election and the right one can be several $100s per month, permanently. Fourth thing retirees are questioning, and this is the one generating the most questioning right now, whether the base benefit SSA calculated when they first filed was correct from the beginning. This is the deepest question, and it is the one that has been sitting unasked for the longest because it requires believing that SSA's initial calculation could have been wrong, and then knowing enough about how the calculation works to identify where the error might be. What the questioning is revealing is that initial benefit calculations contain errors more often than most people assume. Earnings record errors incorporated into the calculation at the time of filing, formula application issues where the indexed earnings were not correctly converted to the primary insurance amount, full retirement age calculations that did not accurately reflect the retiree's birth year. Each of these produces a benefit that has been running at the wrong number since day one and continuing at that number because nobody initiated the formal reconsideration process that would have surfaced the error. SSA's benefit reconsideration process allows a retiree to formally challenge the calculation of their current benefit. Under updated SSA
guidance, the process now places more verification responsibility on SSA rather than requiring the retiree to independently prove the error. A reconsideration request initiates SSA's obligation to actively review the underlying calculation, checking the earnings years used, the indexed values applied, and the formula conversion to primary insurance amount, rather than simply defending the original determination. The retirees who are questioning and initiating reconsiderations are the ones who stand to recover the most. A benefit day's been running $80 per month below the correct amount for 4 years, represents $3,840 in cumulative underpayment, recoverable retroactively to the date the reconsideration is formally initiated. Every month that passes without initiating the process is a month that retroactive window does not cover. Call SSA at 1-800-772-1213 and ask to initiate a benefit calculation reconsideration based on a potential earnings record discrepancy. The date of that call is the date your retroactive eligibility begins. Log in to SSA.gov before you call and note any earnings years that seem lower than your actual income from that period. The more specific you can be about the discrepancy you are questioning, the more effectively SSA can route your reconsideration to the appropriate review level. Here is the common thread running through every source of questioning I covered today. Every discrepancy that millions of retirees are finding right now was always there. The earnings record errors were in the calculation from the beginning. The IRMA surcharges were running from the month they were applied. The wrong benefit type was being collected from the date of election. The incorrect base calculation has been determining the deposit since the first payment arrived. None of these errors self-corrected. None of them generated a notification from SSA. They continued quietly, month after month, deposit after deposit, until someone questioned them.
The questioning is right. The errors are real. And the path from questioning to correction is shorter than most retirees assumed when they first started asking. So here is what to do today. Log in to SSA.gov and open your full earnings record. Go through every year and flag anything that seems lower than your actual income from that period. Break down your monthly deposit and identify every deduction. If your Part B premium exceeds $185, download and file SSA-44 with specific documentation of your qualifying life-changing event. If you are a surviving spouse, call SSA and request a survivor benefit comparison review. And if your base benefit has ever felt wrong, call SSA today and initiate a benefit calculation reconsideration before another month passes at a number that may never have been right. Millions of retirees are questioning their benefits. The ones who act on what they find are the ones whose deposits change permanently. Start questioning yours today. If SSA Now gave you a reason to question what you have been accepting, subscribe to this channel and turn on the bell. Every discrepancy source, every correction pathway, every answer to the questions SSA never prompted you to ask, I bring it here before the accepting turns into years of money left on the table. And share this video with someone you know on Social Security right now. Their questioning should start today too. I will see you in the next